Hi guys, welcome to this Money Control live stream. Brand new day, Tuesday morning. You're watching Morning Trade with me, Nandita Khemka. Well, the setup for now is looking positive when it comes to global cues. Wall Street had a mixed close, but Dow hit a fresh record. GIFT Nifty hinting at a start above that 21,700 mark. But most importantly, even if we open in the green, we'll have to see whether or not we manage to sustain those gains. Because even yesterday, the setup was quite strong when we started out. But of course, we changed course. And we saw what happened with the mid and small caps, ending deep in the red. But this morning, GIFT Nifty hinting at a start above that 21,700 mark. Let's see whether we open around that level or whether we succumb to profit booking today as well. But of course, lots lined up over the next 30 minutes. We'll be talking about what to do with PSU stocks after yesterday's sell-off. In fact, it's been selling off for the last few sessions now. So is the party really over, or it's just kind of a break when it comes to the kind of rally that we have seen on PSU stocks? Of course, all your stock related queries, we'll try and take them up. So send them in to us on our YouTube feed, and we'll post them to our technical expert on the show. But of course, before we move any further, let's take a look at the top headlines at this hour. It was a mixed close on Wall Street with the Dow surging to a fresh record. Meanwhile, US 10-year yields dip ahead of the January CPI print. Asian markets meanwhile trade higher with the GIFT Nifty indicating a positive start for the Indian market. Crude holds steady with Brent hovering above that $81 per barrel mark. Meanwhile, Bitcoin extends its gains and breaks above that $50,000 mark for the first time in 2 years. Retail inflation cools off to a 3-month low in January, comes in at 5.1%, slightly higher than what we were expecting due to a spike in food prices. Meanwhile, IIP grows 3.8% in December, higher than estimated. So, of course, double delight coming in on the macro front. RBI Governor Sacchitanand rules out any review of the Paytm decision, calling it a well-thought one. Also says lower government borrowing projected in the budget frees up resources for the private sector. Among stocks in focus today, Coal India reports better than expected numbers. Also in focus will be NMDC, GMR Airports, Union Bank, BHEL and PNB due to their inclusion in the MSCI Global Standard Index. In important earnings to track today, Eicher Motors and Hindalco from the Nifty will report third quarter numbers. From the broader market, watch out for Siemens, BHEL, Oil India, IRCTC and the likes when it comes to earnings. These will be reporting earnings for the quarter gone by. All right, on that note, let me bring on board our technical expert for today. Joining me, Sacchitanand Uttekar, VP Research, TradeBulls Securities. Great to have you on the show. As usual, every Tuesday morning, Sacchitanand, how's the setup really looking like, given the fact that, we started out in the positive zone yesterday as well, but we succumbed to profit booking. And of course, the correction was deeper when it comes to the broader markets. Nifty Bank as well, gave up Friday's low as well. So, how are you looking at Nifty and Nifty Bank when it comes to the charts this Tuesday morning?
Good morning, Nandita. And clearly, if you look at the trend from the last week, it has been more on the negative side. We have seen consistent supply near that 22,000 mark. And even yesterday, we saw a good strong opening. But, again, the Nifty failed to surpass that 21,800, the immediate hurdle that we are seeing on the charts. So if you look at the closing, it is closed below its 20-day exponential moving average for the first time in this particular series. And if you look at the daily RSI, it has started trending below the 50 mark. So I think the overall setup is still negative. We don't see the Nifty, surpassing 21,840 mark so easily. And the kind of data that we are observing right now, I think an immediate swing towards 21,440 could be seen. But eventually, we see that, the seasonality effect for this particular series would continue. And we may see a very broad range action, getting continued for the February series. So we were anticipating an oscillating range of 22,000 on the higher side, and the lower base is placed somewhere close to around 21,000. So probably we are in the mid of this particular range, and we may see Nifty, gradually slipping towards the lower end. So I think it's a classic sell-on rise market right now, unless we don't see a firm closing about 21,840 from here on. The probability of a short covering move or a positive bias maybe would be very low, and we may see the Nifty, giving up most of its gains again. So it's a classic sell on rise, keeping a stop loss somewhere close to around 21,840 on a closing basis. every pullback would be a good opportunity to create fresh short positions. For the day, we are anticipating a swing towards 21,500, 21,440.
All right. Of course, as you rightly mentioned, the gains, not really being able to sustain those gains. And of course, it's a classic sell on rise kind of a setup. But let's talk about specific stocks, particularly the PSU pack. We're getting a lot of queries on our feed, on a lot of these PSU stocks that have corrected quite a bit in the last 3 sessions, right? But let's start with Coal India. That's the stock of the day. Among the top Nifty losers yesterday, lost somewhere around 5% or thereabouts. But, if you look at the numbers that came in post markets, third quarter profit has risen 18% above estimate. Revenue, margins, all of them have been above estimates, and it has also declared an interim dividend of a little over 5 rupees per share. But for on the charts for some of these names like Coal India, ONGC, do you think the setup is more towards correction, more correction to come here on? Would you advise a sell on rise when it comes to these stocks as well?
When we look at some of the names here, definitely, we have seen a very strong, bull trend, very well intact on its weekly and monthly scale. But on the daily scale, we have already observed some, signs of an overbought state, and probably, this is the reason why, the slippages are relatively faster. So I won't, concur with a sell on rise mode immediately, but definitely, the kind of run up that we have seen, a certain cool off or consolidation is necessary for these trends to continue. So probably when we look at something like the Coal India, we may see it, slipping towards 400, 410 levels, which will be an ideal zone to again, reaccumulate, this particular counter. The major trend will only be negated in case if the stock starts, trending below the 375 zone. So keeping a stop loss on a positional basis near 375, declines can be utilized to create some long positions. But chasing momentum is something which could be, unhealthy in this kind of a market. So I think it's better to, wait for certain corrections and then redeploy your longs.
All right, wait for more correction and avoid chasing momentum. That's the call. But, hold that thought, Sacchitanand. We'll talk about more stocks, and we'll talk about the queries that are trickling in this morning as well. But let me also bring on board Shrikant Chouhan of Kotak Securities. Great to have you on the show, Shrikant. We're touching base after a long time. Hope you're doing well. But, looking at the mid and small cap correction yesterday, do you think it's just the start? Because we've seen on and off corrections when it comes to benchmarks. But, the deep correction that we usually see on mid and small caps after the kind of run they've seen, that hasn't really happened. Yesterday, we saw a 4% kind of, sell-off on the Nifty small cap index. Do you think there is more to come?
Yeah, good morning, Nandita. Good morning, everyone. I think the way the market is now correcting from the highs, if we see the overall broader corrective pattern of the market, then we are seeing a good amount of correction in almost all mid-cap companies. But in fact, if we see the overall trend of last 6 months, then most of the rally that we saw in the market, it was mainly because of mid-cap and small-cap. So the similar sort of trend we are seeing, wherever there is a correction, we see correction in those companies which have done really well. And stocks like Reliance Industries or maybe State Bank of India, a few other index heavyweight stocks like ICICI Bank or even Axis Bank, they are still in the range. They are not breaking their important levels, or maybe they are not correcting from their highs, and maybe that's the reason we are seeing indexes still at 21,500, 21,600, which is roughly 3%, 4% from the highs. But mid-cap stocks are falling from the highs. So yes, there is a possibility that we may see some more correction in the near term. Also, we are approaching to the end of the financial year. So the possibility is that also all these mid-cap companies have now started reporting their quarterly numbers. And in the past, I mean to say in last 3 months, they have rallied much ahead of their current earnings or maybe in the future earnings. And maybe that's the reason we are seeing good amount of profit taking, but it's a profit taking or it's a corrective pattern sort of formation for all these mid-cap companies. After some more correction, maybe 3 to 4% more from here, we can expect some stability in the market.
Right. Well, would you say the same about the PSU pack as well? In the last 3 sessions, we've seen quite a lot of wealth being eroded, right? 6.5 lakh crore kind of wealth eroded when it comes to PSU pack over the last 3 sessions. And if you look at some of these rail stocks, they've come off 30% from their peaks. Do you think this is a healthy correction playing out Do you think or do you think the party is pretty much over for now?
Yeah, it's a healthy correction. I think party is over or not is very difficult to say right now because whenever in the past we saw some correction in these PSU companies, there was good amount of correction because the confidence level is still very, very low. After this particular correction, if there is any rebound, then based on that only we can say that whether it is like gaining the similar sort of strength or not. But while looking at the overall process, reforms, and overall specific news flow for the sector, I think after this particular correction, again, we can expect a very good rebound from lower levels. If they are correcting to their important support levels, or let's say to their important fair value levels, then we can expect recovery because stocks like BPCL, IOC, or maybe this thing NHPC or RVNL, they were like much ahead of their current earnings, and multiples were like at crazy levels. So I think there what we are seeing some correction. But otherwise, if we see the trend of next 2 to 3 years and the way there is news flow, I think it will be an opportunity for those who have missed the rally. So look for adding stocks from the PSU banks as well as from the other PSU enterprises. See, like now from here onwards, the selective activity will come. A lot of selective stocks will perform. It's not that all the sector, all the stocks will perform, but more and more we need to be stock specific.
All right, need to be stock specific, but I'll take the liberty of posing some viewer queries that are coming in on the PSU pack, particularly the railway stocks. We have a query where, our viewer, So Mendegar, wants to know whether it's a good time to enter into railway stocks like IRFC, IRCON, RVNL. As I mentioned, these have come off quite a bit from their peak. Do you think now the risk reward is looking favorable, or do you think wait for some more correction before looking at getting into these stocks?
See, at our fundamental levels, we are not tracking any railway company. The reason is because like the data were like not sufficient for us. But now here onwards, we will definitely focus on the sector to watch out for, because now there is a correction also and a lot of data is available. But based on their overall performance of last 6 months and based on technicals, I think there are a few stocks which are really going to do well. Like we like RITES, RITES, which is currently trading around some 570, 580 levels. There we saw a very a strong volume-based as well as delivery-based activity. Sorry, currently it is at 700 levels. So in case if it is available at 600 levels or maybe at 650, it will be an opportunity to buy and hold for next few months. The equal amount of rebound is more likely. We also like RailTel, which is currently trading around 365, 370. There also the correction is not going to last for more than next 1 or 2 weeks. And in case if there is any furthermore price correction, then the stock can fall to maximum 350. So these are the two stocks on which we are focusing. We also look IRCTC, but IRCTC is still at its crucial levels. In case if there is any correction, then close to 850, we should look for adding IRCTC also to the railways portfolio.
Right. Aside of that, I want to bring your focus on Bharat Forge. Now, this stock, plummeted 15% yesterday. Of course, numbers numbers came out yesterday, but the outlook from the management wasn't really encouraging. Q4 and FY25, they sounded pretty much cautious. And if you look at the brokerage notes this morning, most of them have maintained a sell and underperform call, right? CLSA has an underperformed, in fact, sell rating target is at 977, and growth momentum is likely to slow down. They have also said in tandem with what the management has, guided. It's the subsidiaries that remain in red, and that is dragging down the profitability of the company. That's what CLSA has maintained. Even Jefferies, they are concerned on the cyclical headwinds in both exports as well as Indian truck market, right? And of course, Jefferies is also saying that they are concerned about the rich valuations. Given the kind of battering that the stock has seen yesterday, do you think much of it or much of the bad news is already in the price, or do you think there could be some more sell-off coming in?
I think some more sell-off is more likely. The reason is because it is consistently failing to deliver numbers on the EBITDA front. Also, there is a possibility, or maybe we can say the risk of EV, which is growing, and news flow from the company is still missing. So because of that, I think the stock is under pressure. And whenever there is a consistent miss on the EBITDA side, we see that stock come under profit taking or maybe selling pressure. So this time it's a classic example because now the lot of sorting will come. I mean to say those stocks which are not performing since last few quarters, they will get punished. So maybe because of that, yesterday we saw a good amount of selling pressure in the stock. And from here, the stock can furthermore correct to the next levels of maybe 1,000. Based on fundamentals, we are expecting stock to fall to the levels of 850, where it has its fair value. But based on technicals, at least the possibilities of hitting thousands are very bright.
Right. Another stock I want to bring your focus to is NHPC. As I mentioned, some of the PSUs have not reported great set of numbers and they are getting punished. Perhaps that could also be one reason why we've seen a lot of sell-off in these names. So NHPC in particular, how are things looking here? It has come down from triple digits to double digit stock, right? So, how is the outlook looking like here?
Yeah, for NHPC also, we saw a substantial rally. The OFS was around 75 levels, and from there all the way moved to the levels of 115. It was mainly because of specific strength in the PSU stocks and because of the news flow and order book all. But when the time comes on the quarterly numbers or on the delivery side, most of the time such company fails to perform as per the expectation. It's not that they are not performing, they are doing well, but they are failing to perform as per the expectations. And maybe because of that, we are seeing disappointment or maybe profit taking. But I think close to these levels, around 75, which was the OFS price, I think stocks should stabilize. But in case if there is any furthermore weakness and market starts searching for the fair values or maybe the fundamental value, then the stock can fall to the levels of 60. That's the overall view. But I think if there is a long-term view, then between 75 to 60, we should look for adding. The view should be more than 12 months. It's not that we are investing with a view of next at least 6 to 12 months. Then I think the stock may disappoint. But the strategy should be to buy if there is any correction.
All right, buy on correction, that's the call on NHPC. Whoever had a query, I think Sayali Gangapurkar had a query on this particular stock. Hope that answers your query. But with that, Shrikant, I'm afraid we are running out of time. I appreciate your taking out time and joining in this morning and sharing your thoughts with us. Look forward to interacting with you sometime again.
Thank you so much.
Well, with that, let me go back to Sacchitanand and talk about, other stocks. I saw some queries coming in on BHEL. How are the charts looking like here? It has, of course, seen correction. Last 5 days, we've seen 7% kind of correction. Not, it's not as bad as, some of the other PSU stocks that have gotten hammered, right? So, particularly the charts of BHEL, how are things looking at the current juncture? Do you think it will break below the 200 level as well?
Nandita, I think even if it does, it's a good opportunity to accumulate the counter. The reason being that despite of a very strong vertical rally for the last 1 year, its monthly RSI is still trending higher. You don't have any bouts of or any signs of or negative divergence here. So the broader structure is significantly, positive. We have already seen it. Confidently trending above its 2015 highs now. That was the immediate hurdle for the stock. Last month we saw it confidently breaking it. The level was somewhere close to around 200 itself. Now, if you look at the last 10 years pattern, it looks like a classic, rounding bottom formation, wherein the neckline was placed at around 200. So in case if there's a pullback towards 200, I think that will be a very good opportunity again to re-enter into the counter. But definitely, chasing momentum is something that I said would be unhealthy. So on a decline close to around 205 would be an ideal level wherein the stock can be accumulated. The major structure will only change in case if the stock starts trending below 182, and post that probably we may see a major breakdown coming in. But the probability of that happening also remains low. So I think a pullback is something would be very healthy for the counter. Somewhere close to around 204, 205, an ideal zone to accumulate. keeping a stop loss somewhere close to around 184 on a weekly closing basis. And we may see this particular rally getting, extended towards 265, 280. So I think it's a good candidate from a buy and decline perspective.
All right, buy on decline. Krish, hope that answers your query. But let's talk about a Yes Bank now. We saw a few days of very good rally coming in on Yes Bank, but yesterday, of course, it was down somewhere around 9% or thereabouts. But we have a query coming in from Anurag. He's making a bit of a loss, he said, and he wants to know whether he should exit. What would you advise him to do?
Well, considering the time frame, even on the short-term charts, we've already seen a good, strong extended move. And there are no further price patterns, indicating any further extensions here. Definitely, in case if we see the stock, surpassing that 33, 34 mark, we may see a move towards 36, where it's 200 weekly exponential moving averages placed, but nothing beyond. So I think the upside remains capped here. We've already seen a good, strong vertical rally. It's better to take the losses and look for better candidates within the space. I don't see the stock, sustaining near these levels. So probably we may see it again breaking down below 22 levels soon. So I think it's a good time wherein, in case if the stock again starts rebounding on the higher side, it will be a good idea to, reduce your long positions and stay away from this such counters.
That's the view. Hope that answers your query, Anurag. But let's take up a query that is coming in from Vijay, and he wants to know your thoughts on Pitti Engineering. If you track this stock, he has 4,000 shares at the rate of 723. The stock is now quoting at 650 or thereabouts. Numbers weren't all that enthusing, I guess, because the stock fell post that. If you're tracking this stock, what would you advise him to do?
Sorry, Nandita, I couldn't find this counter.
All right, no issues. So let's talk about a Bandhan Bank then. Asset quality concerns have been weighing on, and of course there are some regulatory issues as well, and of course the stock is in F&O ban today. I think I have spotted a query on Bandhan Bank from Siddharth Jain. Is the setup looking weak here? Do you think the stock has broken below key support levels, or do you think there is still some way to go?
Well, I think this particular query was also it also came up last week, and we, continue to hold our negative bias here. On the weekly and monthly scale, despite of the market performance, this particular stock has been trending lower. So clear-cut, underperformer, plus the kind of range breakdown that we have seen at around 200, 210 levels is again, reconfirming the weakness for this particular trend. So we don't see it, reviving soon. Gradually, I see this particular stock, trending towards 175, 180 kind of a zone. So I think it's a good stock to, short, but unfortunately, the stock is in ban. So in case if we see a pull off here, a pullback towards 210, 215 would be an ideal zone wherein fresh short commitments can be taken. The major trend still remains weak, and we don't see it improving very soon.
All right, the major trend remains weak. But let's talk about an Eicher Motors then. Numbers will be coming out today. Yesterday we saw Hero, emerging as one of the top losers on the Nifty post its numbers. But ahead of numbers on Eicher Motors, would you, recommend a position?
A disclosure that we have already recommended building long positions here. We see that, the stock has been consolidating well above that 3,800 mark, where its immediate support is based. We saw a kind of a bullish Harami formation on Friday's session, and the formation is awaiting a confirmatory close above 39.40 levels. So we are expecting that there would be a confirmation soon, and we may see this particular rally getting extended towards 4,100, and that's why we have recommended building long positions here. Keep a stop loss somewhere close to around 38.10 on a closing basis, and one can consider going long.
All right, this query on Eicher Motors had come in from Rahul. Hope this helps, Rahul. But let's talk about Ashok Leyland now. We have a query coming in from Rajesh Veera. He wants to know your thoughts on Ashok Leyland. He's holding shares at an average price of 178, and his time horizon is that of long term. Ashok Leyland, it has been stuck in a downtrend only if you look at the last 6 month, 1 month charts. But, for somebody who's holding on to it, would you advise them to stay put?
It's a good counter to accumulate, especially if you look at the major structure. We already seen it, confidently trending, breaking out of a 170 zone and trending there. It has maintained, its consolidation within 185 on the higher side and 170 on the lower side. So probably we may see a few more months of consolidation here. But overall, I think the trend structure is very healthy. Eventually, we see this particular stock, trending towards 210, 230 kind of a zone. So I think it's a good stock to accumulate. Keep adding this counter with a stop loss at around 155 on a weekly closing basis. And one can review the stock once it starts trending around 224.
All right, that's the view then. But before I end the show, I want to get in your thoughts on on some stocks that have been included in the MSCI Standard Index. The likes of NMDC, GMR Airports. What are your thoughts on these stocks on the charts? How are they looking now?
Well, most of them have already seen a strong run up here. So probably, a cool off or consolidation will again give a good opportunity. There are no major changes in the trend. So on a decline, these candidates can be accumulated, especially if you look at the counter like GMR, we've already seen a very strong rally from the base at around 30. The stock has almost multiplied 3 times since then. But even right now, the confidence remains intact. We have seen it, scaling above the 2009 highs. The base is now very confident at around 75. So probably keeping a stop loss semi-close to around 72 on a weekly closing basis. Every decline would be a good opportunity. We see this, stock scaling towards 110, 120 kind of a zone. So I think on a decline, one can accumulate.
All right, accumulate on decline. That is the call on NMDC. But I think the last query for the day now on an ITC, Yagnesh has written in once again on this particular stock. But, it is on the brink of, breaching that 400 rupee mark. Do you see that happening? And if yes, do you think it will remain stuck, in a range below that 400 mark? What are your thoughts? How the charts stacked up right now for ITC?
So on your show, we have, discuss this particular stock from the levels of around 470. We have been having a negative bias on the counter. Recently, we did identify the breakdown at around 440 zone and indicated a price target of around 400. So I don't see the stock slipping below that 400 mark. So probably sustaining there may not lead to an extension. We may see, the stock again forming a certain base near to that 400, 405 kind of a zone. So I think in case if someone is holding their short positions here, I think that will be an ideal zone to cover your shorts and probably stay put there. We may see the stock prices getting stabilized there, and we may see a good recovery back in the counter. So I think the sell on rise mode is somewhere diminishing now. We have the RSI, quoting somewhere close to around 23 levels, and it has hit that oversold kind of a zone. So we don't see any further declines here. Probably 400 support may hold on for this particular series.
All right, that's a support level to watch out for. But very quickly, thoughts on Suzlon as well as Tata Power. Suzlon hasn't, it has fallen, yes, but it is not very far from its 52-week high still. And Tata Power got badgered after its numbers. So these two stocks, we have quite a few queries coming in on these two stocks. How are the charts poised here?
Despite of the fall on the weekly scale, we don't have any, a specific price reversal formation on the weekly chart. But if you look at the weekly RSI, it has been displaying a divergence, negative divergence, since last few weeks. So probably, one needs to be cautious here. In case if someone is holding longs here, it's ideal to retain your position with a trailing stop loss mechanism. Keep a stop loss somewhere close to around 39 on a weekly closing basis. But I would not recommend adding any further longs here because of the negative divergence which is placed on the charts. On the contrary, Tata Power, we may see a decline towards 320, but that particular decline can be utilized to create fresh long positions. We see this particular stock eventually, scaling towards 440, 460 kind of zone. So I think Tata Power can be accumulated on a decline, and Suzlon can be avoided.
Right, that's the view then. But completely timed out then. This wraps up our query segment for today. But Sacchitanand, your picks for today?
We are, recommending two short positions here. One of them we have already recommended to our clients. There's a fresh breakdown on RBL Bank. We have seen weekly RSI slipping below the 50 mark. Negative crossover on its 5 and 20 weekly exponential moving average, and that's why we believe that the stock may face a very strong resistance at around 250, 260 kind of a zone. So keeping a stop loss somewhere close to around 255, still we are recommending fresh short positions here. We see the stock, slipping towards its 200-day exponential moving average, which is placed at around 228. So a positional short on RBL Bank. A fresh breakdown has been witnessed on ABB as well. It's a bearish pennant formation. And if you look at the monthly RSI, it has been displaying a negative divergence there. So probably the effect could be seen sooner, quite soon now. We're expecting a move towards its 200-day exponential moving average, which is placed at around 40 to 50, which also coincides with the bearish pennant formation. So keeping a stop loss somewhere close to around 44.85. Fresh short positions are also recommended in the ABB. And a bullish call on Asian Paints. We don't see a major turnaround, but there could be a quick move towards 3030. The stock has been trending lower. It is showing a kind of a positive divergence on its RSI, and probably we may see a quick short covering rally here, which can be capitalized with a stop loss somewhere close to around 29.20. So these are the three stock trading ideas where we are confident, at least for today's trading session.
All right, those were the recommendations coming in from Sacchitanand. With that, Sacchitanand, as usual, thanks a lot for taking out time and joining in this morning and sharing all your thoughts with us and addressing our viewer queries as well. With that, we've come to the end of this edition of Morning Trade. So from me and the entire team, thanks a lot for watching. But stay tuned. There's lots coming up on the other side.